What's up everybody? Welcome to the Stocks channel. My name is Cory and today we had a very interesting day to say the least in the stock market. We saw the Russell 2000 getting absolutely destroyed and going deeper into this correction, and the rest of the indices saw selling as well. So what does this mean and where do we go from here? First up, let's take a look at the Nasdaq 100 QQQ ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so it's probably more helpful to start out with the Nasdaq futures market because we are watching this inverse head and shoulders. We can see that the right shoulder is kind of taking a break here, and it's sort of forming an ugly cup and handle pattern, which looks like it's trying to take a break before we come up to retest this neckline. So this pattern is going to be very interesting to pay attention to, because remember, if we break above the neckline, this does hint that the Nasdaq 100 would be trying to go back up to new all-time highs, because we would travel the distance from the neckline to the bottom of the head above the neckline. So we'll continue to watch this pattern and I'll update you daily on the progress of it. But remember that neckline is somewhere around 13,300 on the NDX, which is also around $324 on the QQQs. So going back to the QQQs, to be perfectly transparent with where I think this market is I do think that we finished out this ABC correction and we're going back into the higher degree trend, which is still a bull trend. If you pull up the NDX and you look at a weekly chart or a monthly chart, you will still see bullish price action with bullish trending. So right now we're going to take the higher degree trend, which is still bullish. And even on this daily chart, we did get two price action closes over top of the 50 EMA now, and we're well above the 20 simple moving average. We still have some work to do on the trend to get it back into trend mode on the daily chart, but the bulls are taking it one day at a time and they're slowly but surely starting to reverse this market. So the bullish pattern that I still favor in this market on the QQQs is still this 1, 2, 3, 4, 5 waves up to the upside. Now I'm just drawing this for reference, but you can see that it does look like we finished out wave 2 because we got this really nice pivot at the lows. We came down to 310, which was a strong support level, and we bounced off that level and we continue to start closing higher. We got 2 days in a row over the 50 EMA, and we're starting to develop a strong confluence area of support where all of these moving averages are coming right to the same point, which is right around 317. It's no surprise that the QQQs came down to 317, and that's where they found support today. So if you're trying to short this market at this very strong support level, you're playing with fire because this is a strong support level which is likely to hold up if we're going into a bull market. That doesn't mean it has to hold up. If the selling does pick up momentum, we will see this level break down. But also look at the volume down here and you could see that the volume is actually lower than it was yesterday. So if this was a huge high volume sell-off, we would have saw higher volume and we would have saw support breaking down at 317. So if anything, this was more than likely just a bear trap and the smart money playing games with the retail investors, trying to shake them out of their positions before we go into this wave 3. Remember that I said wave 2 is always the trickiest because you never quite know that you're in the wave 2 or going into the wave 3 until you get that higher high close. So we still want to see a close back over 324 before we get too bullish on this market. Remember right now I'm bullish on the QQQs because the weekly and monthly charts are still bullish. We're not too far overextended because we've already had this really nice pullback where we dropped about 11% from the previous all-time high. Also, a quick thing to note is notice that when the QQQs were going down, all of the bears were talking about interest rates and talking about how the high interest rates were the reason that the QQQs was going down. We saw the rates go down over 2.7%, and none of the bears are pointing towards lower rates as the reason the QQQs are dropping. So you can't have it both ways. Either the high rates are causing the QQQs to drop, or it had nothing to do with it all along. So if you're looking at the rates, they are on their way back down, which as most bears were telling you on the way up, that was the reason the QQQs are falling. Now we have rates going down, and nobody's mentioning that the rates are going lower while the QQQs are going lower. So I do agree that low rates are bullish for the QQQs, but I'm also a technical analyst that doesn't care what the rates are doing because we're following the price action and the trend. So going back over to the QQQs, I'm still favoring this 5-wave pattern to the upside. It's very likely that it's going to struggle to break through these upside resistance levels, but as long as we continue to close over support levels and we're slowly building up that bullish trend, this is the direction that I think the market wants to go, so we need to watch it very closely. Now don't forget, I still think we're at a crossroads and I still want you to be a defensive bull. I don't want you to buy blindly and just assume the market's going higher. So watch these critical support levels very closely, and one of these critical support levels is now right around 317. That's where the 50 EMA is, and that's where all of these moving averages are starting to build up. If we continue to head higher off of these levels, that's going to be a very bullish sign, but we still have to break through resistance at 320, 322, and then the ultimate test of resistance, which is at 324. Now, if this bullish pattern starts breaking down, that means we're going to start closing back below that critical support at 313. 313 is by far the most critical support on the triple Qs. If we start closing back below 313 after we got all the way up to 320s, that's not going to be a bullish indication. Remember, we're trying to look for higher highs and higher lows on the daily chart, and currently we do have a higher low, but we don't have that higher high yet. In order to get the higher high and make this chart remain bullish, we need to get that close over 324. However, if we start closing below 313 and maybe even get back down to 310, that's now going to be a lower low on the daily chart, and that's going to start favoring bearish scenarios and bearish probabilities. So we're right in the middle, but we're still holding up above that critical support, which right now is the 50 EMA, and we're slowly but surely developing some bullish trending. You can see that the 20 simple moving average here is starting to flatten out, and it does look like it could be starting to reverse and start having a positive slope. We already have a positive slope with the 5 EMA and the 13 EMA, and the 50 EMA is currently flat. So when I look at this market on the triple Qs, I still do have a bullish bias, and today I was actually a buyer of the triple Qs because we closed right on top of support. Now I know my risk is to the downside, and I know my exit strategy if it goes against me, but I know my potential reward is possibly new all-time highs, and if we get a close above 324, I'm going to be trading to the long side much more aggressively. So let's do a quick summary of the triple Qs. You want to watch support levels at 317, and the critical support level is going to be down here at 313 and 310. If we start closing below 313 and 310, it's not likely that this 307 level is going to hold up. We need to continue to form higher highs and higher lows, and a lower low at this point would be a close below about 311. Now to the upside, if we can hold up above the 50 EMA and start developing bullish trending, we're going to have to battle through 3 resistance levels at 320, 322, and 324. A break and close over 324 for 2 days in a row is going to let us know that this market is likely in that wave 3, which could take us all the way up into the 330s or the 340s on the triple Qs. So we need to continue to be patient, and we need to continue to be defensive. Even though we are bullish and we're expecting higher prices, we need to be flexible, and we need to be ready to reverse course if we see support levels breaking down. All right, next up is the S&P 500 SPY ETF, and we saw SPY going down 0.79% today and closing right over top of that support level at 389. Remember, the strong support level we want to remain over to remain bullish is the 20 simple moving average, which is right around 388.50. We did find support at that level intraday, and we did close higher over support at 389. We're still maintaining a bull trend, but it is definitely starting to build up some bearish momentum if we see the price action close below the support level at 389. Remember, if we close below the 20 simple moving average, we're looking for a retest of the 50 EMA around 384. Now to the upside resistance, we're looking to close back above the 394 level to retest the all-time highs at 397. We still got a lot of resistance to break before we talk about our price target up at 404, because we would still have to break through 394 and 397 before we worry about that level. So right now on the daily chart, you can still see bullish trending, and the price action is still holding up above the 20 simple moving average. So watch that critical support at the 20 simple moving average, because if we start breaking below that, you want to get a little more bearish on the market. Next up is the Dow Jones, and we saw the Dow going down about 0.97% and closing below the 13 EMA, but still holding up above the 20 simple moving average. You could still see we're in a bull trend, but it does look like we're cooling off ever since we hit that all-time high at 330. Upside resistance is now going to be 327, and if we break over there, we're going to be looking back up for 330. Downside support is right around 322, which the 20 simple moving average is now coming into that range. Below there, we do have another support level at 320, but a close below the 20 simple moving average is a little more bearish, and it means we're likely retesting the 50 EMA, which is now around 316. Now look at the Dow, and you could see we had this really big parabolic move, so it's not that surprising to see it cooling off and taking a break. We still have a bull trend, and the price action is still holding up above the 20 simple. Next up is the Russell 2000 ETF, and if you watched my episode on Sunday, I explained exactly why I was bearish on the Russell 2000, and I told you to be very careful and stay away from it. It's way too far extended on monthly charts, and it's just not a sustainable move. I can show you really quick on the Russell 2000 index that this move has basically gone up in a straight line, and this is a monthly chart, so this is more of a macro level view. This is just not sustainable, and you can see how uncertain this month of March has been for the Russell. Because we've been going way too far extended, it's time to cool off. So right now on the Russell 2000, I'm not bullish, and even though I'm going to give you support levels, I really suggest just staying far away from the Russell 2000 until it finishes going through a correction. it could easily drop 15 to 20% before this correction is over. So right now you could see in one day, we not only closed below the 20 simple moving average, but we did go even farther than that and close below the 50 EMA. So in one day, we closed below 2 critical support levels. That is a hot knife through butter, and that is not what you want to see in a market if you're looking to buy off support. Those support levels were blasted through like they weren't even there, and that is never a good sign for the bulls, and it's actually a great sign if you're a bear that support levels are not holding up, which means there could be much more downside. So with a close below the 50 EMA, there is a support level around 215, but it's more than likely that we're going back to retest that trend line of support around 205. So right now on the Russell 2000, I'm favoring it to continue to bleed out, even though we may get dead cat bounces along the way, down towards the low 200s before possibly finding support. I'm not bullish on the Russell 2000, and yes, I do think the Russell 2000 can go lower while we see the triple Qs going higher. The same way we saw the tech sector go through a correction while some of the other sectors were doing well, it's the same exact thing that we can see now. We could see money leaving small caps and going into large caps, and we could still have bull markets in other sectors of the market. Now, as far as upside resistance on the Russell, you're going to have resistance at 218 and 222, and of course the 20 simple moving average at 224. Next up is the ARKK ETF, and we see ARKK going down over 2.40% today and still closing below the 20 simple moving average and the 50 EMA. We still have a bear trend and we still have bearish price action, so there's no way you want to be bullish on this ETF. Downside support levels are going to be right around 117 and the support trend line, which is right around 113. Upside resistance is still going to be 125 and the 50 EMA at 131. Remember, if you're looking to go long on ARKK, you want to see a price action close for 2 days in a row back over that 50 EMA at 131. Don't try to guess and don't jump the gun. Let the price action and the trend go back to bullish before you become bullish on the ARK ETFs. Next up is the VIX, which is our fear indicator, and we did see the VIX climbing 7.5% today, closing at 20.3. Don't forget that there's support right around 20 and we're just barely above that support level. I added another support level in here, which is 18.2, and that is where the gap is currently open from the March crash. It looks like the VIX does want to come back down and close that gap at 18.2, but we're just having a bumpy ride along the way. The VIX has already closed below 20 for 2 days in a row, and we did get a short volatility spike, and then yesterday we were back below support at 20 yet again. So the VIX is sort of just bouncing around at these low levels, but it's really not going up enough to be too worried about a deep correction. Remember, we need to see the VIX all the way back up about 25 before we worry about a major correction in the stock market. Don't use hindsight bias with the recent tech correction to just assume that there's another correction coming. With the VIX this low and staying below that resistance level at 21.6, you still want to have a bullish bias because that means there's low fear in this market. If we see the VIX start closing higher and getting back up into the high 24s and low 25s, then we will change our stance and we will get more defensive and get ready for a possible correction. But right now the VIX is still holding up below resistance and it's still hanging around that support level around 20. On gold, it looks like we're heading back lower and we failed to create more bullish momentum. It looked like gold was getting ready to head back up to the price target at 1761, but now it's breaking down and looks like it's ready to head lower, maybe back towards support at 1686. On silver, we're back down to support at $25 and we need this level to hold up for any hopes of silver remaining bullish. If this level does hold up, we're looking for a retest of the 50 EMA around $26. Next up is Bitcoin, and we see Bitcoin trying to hold on for dear life today, only up less than 1%, and it looks like it is staying below that 20 simple moving average. So just like I said with the Russell 2000, if you watched my episode on Sunday, I told you exactly why I suggest staying away from Bitcoin. It's way too far extended on the monthly chart, and it needs time to cool off and go through a correction. And remember that corrections in crypto could easily turn into crashes. It's very possible we see Bitcoin drop 30 to 50% before this correction is finally over and it's ready to go higher. Remember that I'm a Bitcoin bull and nothing I'm saying has anything to do with the fundamentals of Bitcoin. This is 100% a technical correction and it's something that we have to get through if we want Bitcoin to continue to be able to climb higher. So watch the critical support level on Bitcoin, which is right around 50,000, because if that level does fail to hold up as support, we're more than likely going to see a waterfall wave of selling and we're going much lower on Bitcoin. We could easily get all the way back down to about 35,000 and possibly even lower. So I don't suggest buying Bitcoin at these levels because there's just not enough upside reward for the potential downside risk. Next up is Amazon stock, which went up 0.86% today. And at one point it was trading all the way up near the upper Bollinger Band. However, we gave back a lot of those gains and we did close below the 50 EMA. So resistance is still going to be right around 31.50, and to get bullish on Amazon, we want to see 2 price action closes back above that resistance level, which is right around $3,150. Downside support is still going to be 30.90 and 30.33. On Tesla stock, we went down over 1% today, and again, we're still getting bearish price action with the bearish trend. We cannot get bullish on Tesla until we get a bull trend and we get 2 price action closes back above about $710. We still need to form a daily higher high, which is up here around $720. So don't get overly bullish on Tesla until we see the price action and the trend confirm that we're going back into a bull market. We do have support down here at 618. And if that level breaks down, we're looking back for 550 as possible support. On Apple stock, we went down 0.69% today, and we're failing to break above this resistance level right around 123. We're still holding up above the 20 simple moving average, but we're still trading below the 50 EMA, which is now at 126. We need to get back over the 50 EMA, and we need to start breaking over resistance at 127. Downside support is going to be right around $122 and $120. On the financial sector, we continue to see weakness with the dropping rates, and we see people are finally selling the financials. They had this really nice bull run, and it does look like it's coming to an end because we're getting 2 price action closes below the 20 simple moving average. We're developing a bearish trend, and it looks like we're well on our way to retesting the 50 EMA in the very near future. On the industrial sector, we saw selling today going down 1.75% and closing right on top of the 20 simple moving average. We still have a bull trend and we're sitting right on support, so we could still bounce off of this level and continue to head higher. On the energy sector, we went down 1.46% and we're very close to testing the 50 EMA now, which is right around $47. We're definitely in a bear trend and we see the 20 simple moving averages rolling over. Remember that the energy sector was doing really well during the tech correction, and now we're finally starting to see some strength come back to the tech sector. We're seeing weakness in some of the sectors that were doing well before. On the healthcare sector, we dropped over 1% today, and we're still holding up above the 20 simple and the 50 EMA. We're still in a bull trend, so it's possible the healthcare sector is still going back into a bull market after we continue to break up off these support levels. So going back to the S&P 500, there's definitely still volatility in this market, but we are seeing lower VIX levels, which means less fear in this market. We're very close to knowing if this market is going back into a bull market or if we're going to continue to trend downwards and go into a bear market. So we're still at a crossroads, and I still want you to remain defensive, even though I am calling it being a defensive bull. If you look at the weekly charts and the monthly charts, there still is reason to believe in the higher degree that the S&P 500 and the Nasdaq 100, as well as the Dow Jones, want to continue to go higher. So we're going to continue to watch these daily trends very closely because we're at critical support levels and we could be breaking critical resistance levels in the very near future. So we're either going to break down below support and we'll know the market's going bearish, or we're going to break out over these resistance levels and we're going to know the market is bullish. No matter how you look at it, it's hard for me to get bullish on the Russell 2000. So I'm really just focusing on the Nasdaq 100, the S&P 500, and the Dow Jones. Also, don't forget on the Stocks Channel Discord, I'm giving intraday updates to help you stay on the right side of the trade. If you're interested in joining the Stocks Channel trading community, you can find out how to join the Discord server by clicking on the link in the description of the video. All right, next up, let's take a quick look at our trade idea, which is still Shopify, and we saw Shopify going up 0.17% today. Not that good, but also not that bad considering the rest of the market was red, and we still saw Shopify squeaking a little bit higher on the day. Downside support is still going to be 1133 and 1111, and it looks like we're still well on our way towards trying to get up to the price target around $1,200. A break or close over that price target should bring us back up to $1,260. So remember that Shopify is one of those stocks that we're going to continue to follow until we hit all of our price targets, and I'm going to help you stay on the right side of this trade. If you're interested in more trade ideas, I add more weekly to the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.